You've been lied to. Most of what you were taught about money, saving it, working for it, chasing high salaries, is dead wrong. And while you're out there grinding every day, doing everything right, someone like Warren Buffett, a quiet guy from Omaha, figured out how to make money work for him. And he's been doing it for 80 years straight. Now ask yourself, why are you still stuck? Why is it that despite all the hustle, all the effort, you're still stressed every time you check your bank account? I'll tell you why. Because schools never taught you this. Your job will never teach you this. Even your parents probably didn't know this. But Warren Buffett, the man worth over $100 billion, built his empire by following just a few simple money rules. Rules that are so powerful, so quietly effective, that they made him one of the richest people in history, without ever launching a tech startup, without being flashy, and without even leaving his hometown. This video is not just a list. It's a blueprint, a wake-up call, a crash course in how the wealthy actually think, and how you can rewire your own brain to start doing the same. So if you're tired of watching others win while you're stuck playing by the wrong rules, you're in the right place. Hit that like button if you're ready to change your mindset, and subscribe, because what you're about to learn here, you're not getting anywhere else. These are the 7 money rules that made Warren Buffett wealthy. And rule number 1 will make you question everything you've been taught. And by the end of this video, you won't just understand money, you'll understand power. Rule number 1. Don't save money. Invest it. You've probably heard this one before. Save your money. It sounds responsible, safe, smart. But here's the truth Warren Buffett understood before he even turned 14. Saving money will never make you rich. Let me take you back. Buffett was just a kid when he read a book that changed his life. 1,000 Ways to Make $1,000. Most kids read comics. He studied compound interest. He started buying stocks at 11 years old, not because someone told him to, but because he realized one critical truth early. Money sitting in a bank account is dying. Think about it. Inflation eats away at your savings every single year. Your $10,000 today won't even buy you the same groceries 5 years from now. So if your plan is to save money in a nice little pile, congratulations. You're playing defense in a game that rewards offense. Buffett never saved to save. He saved to deploy. Every dollar was a soldier, and he sent those soldiers out into the world, into businesses, stocks, ideas, to bring back more soldiers. And before you say, well, I don't have thousands to invest, listen closely. Buffett started by buying one Coca-Cola stock, just one. It's not about the amount. It's about the habit. It's about training your brain to stop thinking like a saver and start thinking like an owner. Let me ask you something. How much money do you have sitting in your bank account right now, doing absolutely nothing? Now imagine if, 5 years ago, you'd started investing just 10% of everything you earned. Where would you be today? This is your wake-up call. Every month you wait, you're not just losing potential returns, you're losing time, and time is the one thing money can't buy back. So, here's the action step. Open an investment account today. Doesn't matter if it's $50 or $500. Start small, stay consistent, and most importantly, never let your money sit idle again. Buffett's first rule wasn't about hoarding wealth. It was about planting it, watering it, letting it grow, quietly, steadily, relentlessly. And if this shifted your perspective even 1%, go ahead and hit that like button. It tells the algorithm you're not here to play small, you're here to build. Rule number 2. Be fearful when others are greedy. Let me paint a picture. It's 2008. The stock market is collapsing. Banks are failing. People are panicking. And Warren Buffett, he's buying. While millions are glued to their screens, watching their net worth vanish and pulling every dollar they can out of the market, Buffett writes an op-ed in the New York Times titled, "Buy American, I Am." Do you understand how insane that is? He wasn't just calm in the middle of the storm. He was shopping. He was doing exactly what almost no one else had the guts to do, buying stocks when everyone was selling in fear. And that, right there, is rule number 2. Buffett once said, be fearful when others are greedy, and greedy when others are fearful. It's not just a cute quote. It's a complete inversion of how most people behave with money, and it's exactly why Buffett is where he is, and why most people aren't. Let's break this down. Humans are emotional creatures. We chase hype. We follow crowds. We buy when prices are high because everyone's doing it. and we sell when prices crash because we're afraid of losing everything. It's backwards. It's irrational, and it's exactly how people go broke. You remember crypto in 2021. Everyone was talking about it. Your barista, your Uber driver, your aunt, Dogecoin was going to the moon. NFTs were the future. And then what happened? The hype collapsed. The money vanished. And the people who FOMO'd in at the top, they were the ones left holding the bag. But guess who was silent during the hype and active after the crash? The smart money, the Buffetts of the world. Because when everyone else is running toward the nose, they're watching for the silence. Let me tell you a story. In 1973, there was a massive bear market. Stocks were down. Confidence was shattered. Buffett's own company, Berkshire Hathaway, had a portfolio that looked like a war zone. But instead of backing off, Buffett started buying companies for pennies on the dollar. Washington Post, Geico, businesses with real value, but whose prices had collapsed because people were scared. Years later, those moves made Buffett billions. And here's what most people don't get. Being greedy and others are fearful doesn't mean being reckless. It means being disciplined. It means looking past the panic and seeing the value that others are too emotional to notice. Let's bring this back to you. How do you respond when the market dips? Do you sell everything and run? Or do you look at it like Buffett does, as a sale? Because that's exactly what a crash is, a clearance event for assets. Think about it. If you love Apple stock at $180, why wouldn't you love it even more at $130? It's the same company, same fundamentals, but our emotions hijack us. So here's a practical Buffett move you can steal right now. Build a panic plan. Literally write down what you'll do during a crash before it happens. It could be something like, if the market drops 20%, I'll buy an index fund. If everyone's panicking, I'll double my usual investment amount that month. I won't sell unless my original thesis is broken. Buffett doesn't just react differently during fear. He prepares in advance to act with clarity, while everyone else is drowning in noise. And there's something deeper here. Psychological, even spiritual. Most people make money decisions based on feelings, greed, excitement, fear. Buffett makes decisions based on principles, logic, value, patience. He's not playing the same game as the average investor. He's not trying to catch the next wave. He's waiting for the perfect pitch. And guess what? That pitch only comes when the crowd is running in the opposite direction. Let me leave you with this. When the next crash comes, and it will come, most people will panic. But you, if you've been paying attention, if you've been internalizing this mindset, if you've been watching this video not just to be entertained, but to be transformed, you'll already know what to do. You won't fear the storm. You'll be the one calmly walking in, knowing that chaos creates opportunity. And if you've made it this far into the video, I know you're different, smarter, more strategic. So smash that like button, not just for me, but to remind yourself that you're no longer part of the herd. You're building the mindset of a financial sniper, precise, patient, and powerful. Rule number 3. Buy businesses, not stocks. Here's where most people go completely wrong. They treat the stock market like a casino. They don't know what they're buying. They don't care what they're buying. They're just hoping something goes up so they can sell it fast and feel smart. That's not investing. That's gambling in a suit. But Warren Buffett, he doesn't see stocks. He sees businesses. Every share he buys is a slice of a real company, run by real people, creating real value. It sounds simple, but this one shift, this one mental reframe, is the difference between the average investor and the GOAT. Let me show you how deep this goes. Back in the 1980s, Buffett bought a massive stake in Coca-Cola. He didn't care about short-term price charts. He wasn't asking, is this stock going to go up next week? No. He asked himself, if I could buy the entire business, would I want to own it forever? Think about that. Would you feel good owning a piece of something so powerful, so iconic, so essential, that it will outlive trends, fads, and even you? That's how Buffett thinks. He looks at the engine, not the nose. And here's the kicker. You don't have to be a billionaire to do this. You just need to start asking better questions before you invest. Like, what does this company actually do? Do they have a durable competitive advantage? Is the leadership smart and ethical? Would I be proud to tell my kids I own a piece of this? This is where the game changes. Buffett calls it buying companies with a moat, a protective barrier that makes them hard to compete with. Coca-Cola's brand. That's a moat. Apple's ecosystem, moat. Amazon's logistics network, moat. When Buffett invests, he's not chasing momentum. He's buying castles with moats, and then holding them for decades. Now let me tell you something wild. Between 1995 and 2020, the vast majority of Buffett's returns came from just a few core holdings: Coca-Cola, American Express, Wells Fargo, and a few others. That's it. He wasn't flipping stocks every week. He was building a fortress, brick by brick, and while others were trading in and out, paying fees, chasing rumors, reacting to headlines, he was sitting still, collecting dividends, compounding returns, and sleeping like a baby. It's not sexy, it's not loud, but it's lethal. Because compound interest doesn't reward excitement, it rewards discipline. Now, let's make this practical. You want to think like Buffett? Here's how to start. 1. Stop checking your portfolio every day. If you wouldn't sell your house just because its estimated value dropped 5% today, why would you sell a business you believe in? 2. Read annual reports. I know, it sounds boring, but Buffett reads hundreds of pages of company financials, not because he loves numbers, but because he's looking for truth. A real investor investigates. 3. Invest only in what you understand. If you can't explain how the company makes money in one sentence, you shouldn't be investing in it. Buffett calls it the circle of competence. Stay inside yours and slowly expand it through study, not speculation. Let me hit you with a reality check. The average retail investor underperforms the market. Why? Because they chase, they guess, they listen to hype. Buffett wins because he plays the business game, not the stock game. Here's a quick story. In 1999, Buffett was mocked for not investing in tech. The internet was booming. Everyone was getting rich, except Buffett. He stayed out. Why? Because he admitted he didn't understand it yet. That takes guts. And guess what? When the bubble popped in 2000 and wiped out trillions, Buffett's portfolio stayed intact. He wasn't trying to be trendy. He was trying to be right. Fast forward to decades, he now owns a huge chunk of Apple. Why? Because by then, he understood the business, the moat, the value. He didn't rush. He waited for clarity. And that's the secret. Buffett's not afraid to look stupid in the short term, to be brilliant in the long term. Now let's bring this back to you. Before you buy any stock, stop and ask yourself, would I want to own this business for the next 10 years? Even if the stock market shut down tomorrow. If the answer is no, walk away. If the answer is yes, then buy it, hold it, and let it work for you. This is how Buffett built wealth, not in bursts, but in waves. Not with luck, but with logic. So next time someone shows you a hot stock tip, pause. And remember what the real game is. You're not just buying stocks, you're buying ownership. And if this perspective flipped a switch for you, let me know by hitting the like button and subscribing. Because this channel isn't here to hype, it's here to reprogram your financial DNA. Rule number 4. The power of patience. Let me ask you a question that might sting a little. How many things in your life have you ruined simply because you couldn't wait? Be honest. How many investments did you sell too early? How many opportunities did you walk away from because they weren't instant? How many times did you plant the seed, but never stuck around long enough to watch it grow? This is where Warren Buffett separates himself from almost everyone else alive. His superpower: patience. Ruthless, boring, relentless patience. It's not intelligence. It's not timing the market. It's not even luck. Buffett's biggest money moves didn't happen because he outsmarted everyone. They happened because he simply outweighted them. Let me hit you with this fact. Over 95% of Warren Buffett's wealth was created after he turned 60. You heard that right. The man started investing at 11. But the avalanche of wealth didn't show up until decades later. So what does that tell you? Wealth is not a sprint. It's a slow burn. A compounding fire that takes years to ignite, and then explodes in a way that looks sudden, but only to those who weren't watching. And that's the tragedy of most people's approach to money. They start investing. It doesn't double in a month. And they quit. They chase hype, flip strategies, bounce between crypto, stocks, options, real estate, and wonder why nothing sticks. Let me tell you a story. When Buffett bought $1 billion worth of Coca-Cola stock in 1988, people thought he was crazy. Why Coca-Cola? It's just sugar water. Boring. But Buffett saw a company with global distribution, emotional branding, pricing power, and timeless demand. So he bought. And then did the hardest thing of all. Nothing. No tweaking. No trading. No micromanaging. He just held it. Year after year. Decade after decade. Today, that $1 billion position has paid him over $10 billion in dividends alone. And the shares themselves have 10x'd in value. All because he understood this. The stock market is a device for transferring money from the impatient to the patient. Warren Buffett let that sit. Most people lose not because they picked the wrong company, but because they couldn't wait. So let's talk about why patience works, and how you can make it your financial advantage. Here's the math no one teaches you. If you invest $500 a month into an index fund with an average 8% return, in 10 years, you'll have about $91,000. But stay for 20 years. You're looking at $275,000. Stay for 30 years. It's over $680,000. Same amount invested. Just more time. That's the magic of compounding. But compounding doesn't reward intensity. It rewards duration. Think of money like planting trees. You don't dig them up every month to check the roots. You water them. You let the sun do its job. You leave them alone. But most people aren't growing trees. They're microwaving popcorn. Quick hits. Fast flips. No depth. No patience. Buffett's approach is different. He buys companies he can hold for life. And not just because he loves them, but because he knows that the longer he holds, the more wealth he builds. Passively. Here's another story. In 2016, Buffett revealed he bought a massive stake in Apple. It surprised everyone. Why? Because Buffett was never known as a tech guy. But he wasn't buying technology. He was buying a consumer brand with a fanatical customer base, pricing power, and predictable cash flow. Fast forward a few years, and Apple became Berkshire Hathaway's single biggest winner, worth over $160 billion. Did Buffett sell when it doubled? No. When it tripled? Still no. He let it ride. Why? Because time is the multiplier. Patience is the fuel. Now here's something practical you can apply right now. Next time you invest, make a commitment. I won't even consider selling for at least 5 years. That's it. Lock it in. Put it on a sticky note. Make it your rule. You'll instantly separate yourself from 90% of people who panic at every dip, sell at every scare, and never let compounding do its job. You'll stop asking, "Is it working yet?" and start asking, "What's it worth in 10 years?" Now, does that mean you never sell anything? Of course not. But selling should be strategic, not emotional. Buffett sells, and the story changes, not when his emotions do. Let me ask you something. Would you rather make $10,000 quickly and pay taxes, stress, and lose sleep? Or make $100,000 slowly, effortlessly, with peace? We live in a world addicted to speed. The wealth doesn't move at the speed of TikTok. It moves at the speed of trust, of strategy, of time. So if you've been jumping from one opportunity to another, always in a rush, always in a hurry, maybe that's why you're stuck. Maybe the wealth isn't late. Maybe you're just impatient. And if you've ever said to yourself, "I wish I started earlier," good news. Today is earlier than tomorrow. And if you start today and stay consistent, your future self will thank you again and again and again. So let this video be your anchor. Patience isn't passive. It's the most active decision you can make in a world screaming for your attention. Now pause for a second. Think about the version of you 10 years from now. If that person could talk to you today, they wouldn't beg for more hustle. They'd beg for more patience. And if this idea hit you deep, do me a favor. Hit that like button. Subscribe. Not because you should, but because every week, we're stacking ideas like this to build a life of real, lasting wealth. Rule number 5. Never lose money. Warren Buffett's most famous quote is short, sharp, and strangely misunderstood. Rule number 1. Never lose money. Rule number 2. Never forget rule number 1. At first glance, it sounds obvious, maybe even naive. Isn't losing money just part of the game? Stocks go down, deals go bad. You win some, you lose some, right? But here's the thing. When Buffett says never lose money, he's not talking about avoiding any loss ever. He's talking about something deeper, a mindset of capital preservation, a ruthless commitment to protecting the engine of your future wealth. Because once that engine is broken, the game gets harder, much harder. Let me explain. Most people only think about how to make money. Buffett thinks about how to not lose it, because he knows If you lose 50% of your money, you don't just need a 50% return to get it back, you need 100%. That's math. That's gravity. That's reality. And most people ignore that reality until it smashes them in the face. Let me tell you a story. In the 1990s, everyone was riding the dot-com wave. Tech stocks were exploding. People with no revenue, no product, not even a business model were raising millions. It was pure hype. Buffett, he stayed out. Analysts called him outdated, old school. He was missing out. But he didn't care, because he didn't understand the businesses. And more importantly, he couldn't trust the numbers. So he followed his own rule. If I don't understand it, I don't touch it. And when the bubble burst, wiping out trillions of dollars, Buffett's capital stayed intact. Not only did he avoid massive losses, he was ready to buy while everyone else was bleeding. That's what never lose money looks like in action. It's not about perfection. It's about prudence. It's about saying number 99 times, just to say yes once, to something you believe in deeply. Because Buffett doesn't treat investing like gambling. He treats it like buying a piece of a legacy. And legacies are not built on hype. Now here's the twist. This rule doesn't just apply to stocks. It applies to every part of your financial life. Let's break it down. 1. Avoid high-interest debt. Credit card debt isn't just dangerous. It's reverse compounding. It grows while you sleep, but not in your favor. Buffett has said, if you're smart, you're going to make a lot of money without borrowing. So if you're carrying 20% interest debt while trying to earn 8% returns in the market, you're lighting money on fire. 2. Don't chase what you don't understand. Buffett has missed out on plenty of trends, but he's never lost sleep over them. He sticks to his circle of competence. If it's confusing, overly complex, or driven by hype, he stays away. And guess what? That rule has protected billions in capital. It's okay to miss an opportunity. It's not okay to blow up your future because you got greedy. 3. Focus on downside before upside. When Buffett evaluates a deal, he's not thinking, how much can I make? He's asking, what's the worst that can happen? And can I survive it? This is what great investors do. They don't just seek profit, they manage risk. So how do you apply this? Before you invest in anything, ask, what could go wrong? If this dropped 50%, could I handle it? Am I betting my future on this? Or just being strategic? If the answers don't bring calm, walk away. Here's something you don't hear often. Wealth is not built by making brilliant decisions. It's built by avoiding terrible ones. One major mistake can set you back years, but a decade of slow, steady, thoughtful decisions, that can set you up for life. Think of it like this. Buffett doesn't play offense first. He plays defense, at world-class level. And once he's confident the downside is limited, then he presses the gas. This is why he stayed rich for so long. Because getting rich is one thing. Staying rich, that's a whole different game. And that's where most people fail. They strike gold once, and then gamble it all away. They taste success, and confuse it with invincibility. Buffett never forgets rule number 1. Even today, with billions in the bank, he's still cautious, still reading, still thinking, still protecting the base. Because he understands, if you lose your foundation, everything you've built can collapse overnight. Now let me get personal. Have you ever made money, and then lost it faster than you earned it? Have you ever thought, I was doing so well? What happened? What happened was simple. You focused on the high, not the risk. You chased returns, not resilience. You forgot rule number 1. But here's the good news. You can flip this today. You can shift from a get-rich mindset to a stay rich and grow richer mindset. You can stop asking, how much can I gain? And start asking, how much can I protect? Because when you protect the base, compounding takes care of the rest. Let me leave you with this. Buffett didn't build wealth by being bold all the time. He built it by being wise at the right time, and patient the rest of the time. Never lose money isn't a cute quote. It's a compass, a discipline, a way of thinking that keeps your future safe, while others get wiped out chasing quick wins. So the next time someone tries to sell you guaranteed returns, or the next hot trend, or the next 10x play, just remember rule number 1. And if that one rule has already changed the way you think, show it. Tap that like, subscribe. Because we're not building hype here, we're building real wealth that lasts. Rule number 6. Build multiple streams of income. Let's be brutally honest. If you have only one source of income, you're not just poor. You're vulnerable. Because the moment that one stream dries up, whether it's a job, a client, a product, or a platform, your entire life gets put on pause. Bills don't wait. Rent doesn't pause. Groceries don't care that your paycheck didn't land. This is something Warren Buffett understood early and practiced for decades. He once said, "If you don't find a way to make money while you sleep, you will work until you die." And most people read that line and say, yeah, passive income. I get it, but they don't really get it. Because if they did, they wouldn't be wasting hours a day scrolling TikTok while their only stream of income is one job, with one boss, in one industry, that they don't even control. Buffett is the exact opposite. He owns hundreds of income-producing businesses, railroads, insurance companies, utilities, banks, consumer goods, and every single one is sending him cash, month after month, whether he shows up or not. That's not an accident. That's engineering. Let's talk strategy. Buffett's favorite form of income is called dividends. These are profits that companies pay out to their shareholders just for holding the stock. In 2022 alone, Berkshire Hathaway received over $6 billion in dividends from companies like Apple, Coca-Cola, and Bank of America. Buffett doesn't touch the principal. He lets the ownership stay intact, while the income flows to him like a river. And that's the blueprint. Build assets that cash flow, even when you're asleep. Now before you say, "Well yeah, he's a billionaire, of course he can do that." Listen, he started with a paper route. Literally, at 13 years old, he delivered newspapers every morning and saved the money. But he didn't just save it, he used it to buy a pinball machine and placed it in a barber shop. That one machine started making money while he was at school, so he bought another and another. By the time he graduated, he was already making more money than some adults. That's the mindset. How do I create something once that pays me forever? You can do this right now. Even with limited resources, here are 5 types of income streams you can start building, even as a beginner. 1. Dividend-paying stocks. Start small, $50, $100. Reinvest the dividends. Let the compounding begin. Over time, you'll build a passive income machine that grows without you lifting a finger. 2. Digital products. Write an ebook. Build a course. Sell templates. It takes time upfront, but once it's done, it works for you 24/7. 3. Freelance income. This is your stepping stone. Build skills, stack cash, and use that income to fund more passive streams. 4. Real estate. Yes, it takes capital, but with the right knowledge, partnerships, or house hacking, it's more accessible than you think. Buffett himself owns a massive portfolio of real estate indirectly through REITs. 5. Business equity. Start or invest in small businesses, local coffee shops, online stores. You don't need millions, just smart deals and long-term vision. And here's a mindset shift that changes everything. Your job is not your income, it's your fuel. Use your job to fund income streams, not vacations, not liabilities, not flexing. Build assets, stack cash flow. Repeat. Now let me tell you a quick story. A few years ago, a 29-year-old guy in India started investing $100 a month in dividend stocks. Nothing flashy, just consistent. 10 years later, he's earning over $600 a month without working a single extra hour. That's not luck. That's math. That's time plus strategy plus patience. Most people never get there. Why? Because they stay addicted to earn income, the kind that only pays you when you show up. But the wealthy, they graduate to ownership income, the kind that pays you even when you're asleep. And here's the trap to avoid. Most people spend their income on things that create more bills. A new car, a fancier apartment, another subscription. Buffett does the opposite. He uses income to buy more income. He reinvests, he compounds, he multiplies. And that's exactly what you can do. Starting right now, ask yourself, what is one thing I could build, buy, or create that will generate income this year? What's stopping me? Is it money, or just fear? Am I going to live the next 5 years repeating the same income cycle, or building my exit route? You don't need 10 streams today. You just need to start with 1, then 2, then protect them, nurture them, and let time do its work. Remember, wealth doesn't come from how much you make. It comes from how many times your money gets to work for you. So if this video lit something inside you, do the thing. Hit that like button, subscribe. Because I'm not just here to entertain you. I'm here to help you build financial independence, brick by brick, stream by stream. And we're not done yet. Because the final rule, rule number 7, is the one that ties everything together. It's the reason Buffett never stopped growing, never stopped learning, and never stopped winning. Rule number 7. The best investment you can make is in yourself. You've heard the phrase before. You've seen it on motivational posters. You've probably scrolled past it on Instagram. Invest in yourself. Sounds cute, right? But for Warren Buffett, it's not just a quote. It's a core principle. A law. A financial commandment. Let me be clear. Out of all the investments Buffett has made in his life, billions in stocks, hundreds of companies, decades of compounding, he still says the single greatest return came from investing in his own skills. He said it over and over again. The best investment you can make is in yourself. Nobody can take it away from you. Why? Because you are the only asset that can't be stolen, taxed, duplicated, or deflated by inflation. You are the engine behind everything you will ever build. And most people, they're running on empty. Let me tell you a story. When Buffett was in college, he was terrified of public speaking. Couldn't do it. He'd literally throw up before giving a speech. But he knew, if he wanted to lead, to inspire, to communicate his ideas, he needed that skill. So he signed up for a public speaking course from Dale Carnegie. It cost $100, not a small amount at the time. And that single investment changed his entire life. To this day, he keeps the certificate on his wall. Not his degree, not his net worth. That $100 public speaking course, because it gave him something far more valuable than money. Confidence. And confidence is the real currency of success. Let that sink in. Buffett's billions weren't just built on math. They were built on communication, clarity, persuasion, and trust. Skills, not just spreadsheets. So the question becomes, what are you doing to increase your value? Not your stock portfolio, not your followers, you. Because the truth is brutal. Most people will spend more time picking a new phone case than they will learning a new skill. They'll spend $300 on clothes and won't spend $30 on a book. They'll binge Netflix for 6 hours and say they don't have time for a free course on marketing or finance. And then they wonder why they're stuck. Here's what Buffett did differently. And what you can do starting today. 1. Read like your life depends on it. Buffett reads over 500 pages a day. Not for school, not for tests, for advantage. He once said, that's how knowledge works. It builds up, like compound interest. Every page you read is a mental deposit. It might not pay you today, but one day, in a meeting, a negotiation, an opportunity, it'll cash out hard. 2. Develop high-value, timeless skills, communication, writing, sales, emotional intelligence. These are the skills that translate across industries, platforms, and decades. They don't get disrupted, they get paid. Whether you're an entrepreneur, employee, artist, or investor, the better you are at expressing your ideas, managing your emotions, and solving real problems, the more money will chase you. 3. Guard your time like gold. Buffett has said the difference between successful people and truly successful people is that the truly successful say no a lot. Why? Because time is the only resource that doesn't scale. You can make more money. You can make more time. And if you're wasting yours on low-quality content, toxic people, and distractions, you're silently bankrupting your future. 4. Surround yourself with people who force you to level up. Buffett's greatest long-term investment wasn't just in companies. It was in Charlie Munger, his business partner, his thought partner, his intellectual sparring match. Because when you're around people who think sharper, speak clearer, and move smarter, you rise by default. You don't just need friends. You need mirrors. People who reflect back the version of you that's capable of more. Now let's go deeper. Your value in the marketplace is tied to one thing: the size of the problems you can confidently solve. You want to earn more, solve more, lead more, think clearer, move faster, and that only happens when you invest in the machine. It's not about perfection. It's about upgrading your OS every single year. Ask yourself, do I have a system for learning every day? Am I acquiring skills that make me recession-proof? Would I hire myself at double my current salary? If the answer is no, that's not a punishment. It's a signal that it's time to shift from consumer to creator, from surviving to compounding, from waiting for raises to raising your value. Buffett knew this before he had his first million. He didn't wait until he was rich to invest in himself. He got rich because he did. And now, so can you. Start small, buy the course, read the book, practice the pitch, fix your sleep, hit the gym, learn the skill, train the mind. Because while everyone else is looking for the next 10x stock, you can become the 10x asset. And guess what? There are no market crashes on self-development. There are no taxes on mindset. There's no competition for being the sharpest version of you. That's the game. That's rule number 7. And if every other rule in this video felt powerful, this is the one that powers all of them. So if you're still here, and this hit you deep, don't leave empty-handed. Hit that like, subscribe, not because it helps the algorithm, but because it helps you. Every week, we're building something here. A stronger mindset, a richer life, a smarter you. And that starts with the best investment you'll ever make, yourself. You've just heard 7 timeless money rules straight from Warren Buffett himself. These aren't just hits. They're battle-tested principles that built one of the greatest fortunes in history. But here's the truth nobody tells you. Knowledge without action is just entertainment. You can watch 100 videos, read 1,000 books, and still never change your life if you don't take the first step today. So here's my challenge for you. Pick one rule from this video, just one, and apply it starting right now. Maybe it's starting to read more every day, or setting your margin of safety in your investments, or simply investing in yourself. Do that, do it consistently. Watch how your mindset shifts, your confidence grows, and your wealth starts to follow. If you found value here, smash that like button. It helps more people discover this knowledge. Subscribe and hit the bell so you never miss the next step in leveling up your money mindset and your life. Because this journey, building wealth, mastering money, isn't a sprint. It's a marathon, and it's one you don't have to run alone. I'm here to guide you every step of the way. So let's get to work. Your future self will thank you.